is one, it can slow down growth. If consumers stop spending, if everybody gets afraid and they stop shopping, sorry, that's something in my teeth. If they stop shopping, then companies start losing money, and then your corporate earnings start to drop, which is a very bad thing for stock prices. Number two, if Omicron continuously affects these supply chains, then you're going to have a lot of inflation because workers, you're going to have a hard time getting workers to come to work because they'll all be sick like they are right now. You're going to have factories shutting down, so supplies can't get around. You have ports shutting down because of the virus. In fact, actually, my mother was telling me about some cruise ships that were stuck out at sea where they couldn't port anywhere because nobody wanted passengers to come to their country that potentially had the virus. So ultimately, this is kind of what you're looking at. Another interesting thing is that you have some big banks this week that are going to be announcing their earnings, and that's kind of going to be a big indicator to see if the banks are benefiting from the changes in the Fed policy. The banks kind of will set the tone for how people feel about where the economy is going and if it's going to continue to roar. What's another factor right now? I would say those are the big things: Fed policy and inflation, and then you got corporate earnings announcements. Those are the things you want to pay attention to this week. Okay, so Maurice is asking, what do you think about the ETF DRIV? Um, the ETF DRIV is the expense. Okay, and you asked, is the expense ratio important when buying an ETF? Yeah, the expense ratio does matter, but I believe if it's a good ETF and something you want to be invested in, then that's then I think it's a good move. I don't, most of the expense ratios are pretty competitive, and so while you certainly would rather have something that doesn't have hardly any expense ratio at all, ETFs, competitive ETFs, tend to be pretty solid in terms of what they charge you to invest. So I wouldn't necessarily let that keep me from a good investment. Now the ETF DRIV, that's a good one. That's in technology, if I'm not mistaken. Yeah, things like autonomous vehicles and stuff like that. Yeah, and I think I looked at their top holdings. Their top holdings were companies like Tesla and stuff like that. Um, I am a big fan of it. Actually, I think that this is the kind of thing I would invest in as a long term play. Meaning that we know electric vehicles are going to just blow up and do well. What you don't know is whether or not Elon Musk is going to survive all the competition. Companies like Toyota and others are investing almost $200 billion to compete with Elon Musk right now. That's going to cause him some problems. So ultimately, we know EVs are going to do well, but we don't know if Elon Musk is going to be the king of electric vehicles at that time. Now, if you have a question inside the Zoom chat, put your question in the Q&A section. And just so you know, the questions I answer first are the questions that were submitted by the students this week. So those of you that submitted your questions this week, if you log in at the blackstockmarketprogram.com, that's where you can leave your question for me. I will look it up and I will answer it right away. If you ask me a question on the fly, I may be able to give you a rough answer, but I won't. I wouldn't have had time to kind of look into what the issue is you want me to look into. So if you ask me about a certain stock, I may or may not know anything about that stock because there's thousands and thousands of stocks. So it's pretty much impossible to keep up with all of them, right? But I can definitely take some time to do some research, and that's the benefit of being in this class is that you can leave me a question, and I will look into your specific question specifically for you. So Reggie says, I have the majority of my investments in Cash App. Do I need to sell or transfer my investments from Cash App to Robinhood just to keep them in Cash App, but use Robinhood going forward? Wait, okay. Do I need to sell or transfer my investments from Cash App to Robinhood? I think while there's a lot of different ways to look at this, I don't keep all my investments on one app. So I think maybe a strategy you might want to consider is having investments on different apps. Have some a little bit on Cash App, a little bit on Robinhood, maybe a little bit on E-Trade. You can mix it up. You don't have to have it all in one place. And that's, I think, just from a general diversification standpoint, it might make sense to do that. Let's see here. Let's see. The next question from Terrell says, given the current volatility of the stock market, are you still selling call options to generate income? Yes, I am. That's a consistent strategy. Remember, I talked to you guys earlier about being a sturdy, consistent investor. Well, my strategy doesn't change a whole lot with market conditions. I'm not trying to chase the high of money I can make this week. I pay attention to the dynamics. I like to know what I'm signing up for, so I know what it is, right? But I don't really sort of, say, okay, this week I'm going to be a certain kind of investor. Next week I'm going to be a different kind of investor. I do adjust a little bit, like for example, in 2022, they say that there's a flight to quality. That means that a lot of your crazy up and down tech stocks, meme stocks, stuff like that, those are not going to do as well in 2022, according to the experts. So maybe that flight to quality could be beneficial, going toward companies that have strong balance sheets that are consistently good at making money. If you log in at the blackstockmarketprogram.com, I gave you some of those stocks. In fact, when you log in, just look under what Dr. Boyce is buying at the blackstockmarketprogram.com, and you will see some stocks that I found through research that I believe are tremendously good long-term investments. These are companies that if you invest in them consistently over, say, the next 3 to 5 years, these companies could become the next Apple or the next Google, the next Amazon. But you got to get in these companies early. A lot of people invest heavily in these companies once they're already high flying and doing well. So you kind of showing up late to the party. It's like Bitcoin. Bitcoin is down tremendously. I showed you guys how it's down tremendously over the last, say, 2 or 3 months. But Bitcoin is way up. If you were investing consistently in Bitcoin in 2016, you're a millionaire by now. A millionaire by now. Literally, a person that invested like $100 a week in Bitcoin starting in 2016, who did it on autopilot and didn't, change their strategy at all, I will be willing to bet you that person's a millionaire by now. I don't know. I haven't done the exact math, but let me see. I'm really curious about that now. Let me see. Price of Bitcoin. So if I look at the price of Bitcoin and I go back 5 years, so let's say let's go to 2017. Let's not even go back to 2016. In 2017, Bitcoin was trading for about $1,000. Now it's trading for $41,000. So it's gone up 4,100 times since that time. Yeah, I'd be willing to bet you that if you started investing in Bitcoin consistently in 2017 or 2016, you would have you would be close to being a millionaire now, or at the very least you'd have hundreds of thousands of dollars. This is where people have the big come up. The big come up doesn't happen quickly. The big come up happens slowly. So don't pay attention to what you see like in media where some guy gets a record deal and suddenly he's a millionaire, or he suddenly wins the lottery, or he suddenly gets a chance to go to the NBA. That's not how most people become millionaires. Most people become millionaires very slowly through consistent strategy, consistent behavior. So the question is, what is your consistent behavior right now that you're doing right now that is going to make you a millionaire? Ask yourself that question. And if you can't answer that question, then pick something. Pick something. Maybe something like the $5 a day plan. If you log in at the blackstockmarketprogram.com, there's a free ebook you guys can have on the $5 a day investing strategy, where literally if you invest $5 a day, I show you that a person that invested $5 a day over almost any given period in American history, after about 10 years, they'd have about $29,000. Over 20 years, they'd have $100,000. Over 30 years, they'd have $250,000. In 40 years, they'd have $750,000. That's $5 a day. That's less money than it costs to buy a Popeye's chicken value meal. So really, never let anybody make you think that it's impossible to build your wealth. I think the reason they do that is partly because if you look at American capitalism, capitalism doesn't work without its slaves. Capitalism does not work without people that are willing to give away their resources, right? Capitalism does not work if you're not sending millions of people to school so they can learn how to become financially illiterate and then become obsessive, addicted consumers, right? So the same way Big Pharma benefits financially when you become addicted to oxycodone, big corporations benefit when you become addicted to spending and shopping. Every Black Friday, every Christmas, they got to train, all of us train like Pavlov's dog to go and hop in and buy anything we can buy. Like we get excited about shopping. We get excited about giving our money away, right? We get excited about buying a $20 product and paying $100 for it because of the markup, right? We get excited about the Gucci belt that costs $800 but only costs Gucci $50 to make. We want to do that, right? So ultimately, capitalism is kind of an interesting two-person tango, and I think that when I really look at the system in that certain way, I think maybe that's why we get to the point, like the same way we tell people that it's impossible to increase your economic status. It's almost like telling a bunch of drug addicts that it's impossible to get through the day without smoking crack. Well, it is possible, but it is really hard if you're a drug addict. If you're a drug addict, it's extremely difficult to get through the day without your drugs. So the answer is obvious, though. Don't become a drug addict or go through rehab. Detox yourself, right? So I think everybody needs a financial detox. I really believe that. I think that if you give yourself a financial detox, that's when you learn the difference between your wants and your needs. That's when you learn how to enjoy your money and have fun with it. You can buy yourself luxury stuff if you want to, but at the same time, you are never, ever, ever going to put more wealth into the hands of somebody else than you are to put into the hands of your children and your family. So, one of the things that I brought up yesterday, actually, just speaking on this investing issue and this wealth issue, is last night I enjoyed watching this great football game between the University of Alabama and Georgia. I don't know how many of y'all saw that game. It was a great game. It was a defensive battle. I wouldn't say extraordinary, but it was great because it was two great teams. Both of those teams played excellent. It was really awesome to watch those great athletes on the field together. Now, here's the interesting thing about that game, though, is I couldn't help to be a little bit of a jerk at the end of the game. I know people think I'm a smart aleck when I do this, but I said, pay attention. Notice that after all these games, a lot of times you'll see a white coach surrounded by a bunch of big, strong black men. Where the white guy, got $10 million and maybe a $1 million bonus for winning the game, and the athletes, they get like maybe a trophy or a ring, or they get extra girlfriends, or they get some extra clout on campus. But their families, a lot of their families are broke and struggling. There was a player, was it Derrick Henry or another one, who was the running back for Alabama, and his father was in prison for a bunch of years or something like that. And I just thought about the contrast of that. That this guy is in the middle of this amazing experience, and all these people are making millions of dollars. Everything's sponsored by AT&T, and this is the Ford truck. You see Ford truck commercials during the game and all that. All that's money. All that's money, and it takes a certain amount of economic consciousness, which I guess I have a lot of that because economics is what I study. I see all that money, and I see millions of dollars being transferred. I mean, it costs $1 million or more to do a 30-second ad during the NCAA championship in football. Did y'all know that? It's $1 million. You can't get an ad in that game without paying $1 million, writing $1 million check. So my question becomes, where does that money go to? It's going to go somewhere. They're not throwing it in the trash, right? Where's it going? And to me, logically, it says it should be going into the hands of the people that are actually getting out there, breaking their necks, risking getting paralyzed, risking brain damage in order to win the game. Nobody watches the football game to see the coach. I mean, I don't know about you, but I've never known a single person who's ever watched a football game just to see the coach. We watch the game because we want to see those athletes. I watched the game because I wanted to see that great running back Robinson for Alabama. I watched the game because James Cook from Georgia is an extraordinary player. And some of the players are white, right? You got a great quarterback for Georgia. He was a white guy, but we know that the majority of the athletes that they make the money from are black. Black people only 13% of the population, but yet they dominate sports. I think the entire Alabama defense is black. The entire Georgia defense is black. I didn't see a white guy. Tell me if I'm wrong. I did not see a single white guy on the defenses of Alabama or Georgia. So my point here is simple. When you're talking about black wealth and you're talking about the wheel of capitalism, which is entangled with the wheel of racism, they're kind of connected, right? People think that capitalism feeds off racism, racism feeds off capitalism. It's all connected, right? They're not just extracting wealth from you because you're black, but they do extract wealth from the weakest link, right? And being black partly means historically because you were slaves, you were the weakest link. The easiest group of people to extract wealth from are the black men in America because everyone hates them. For the most part, this country has always hated the black male to a certain point, right? That's why and when someone is disliked like that, then you can exploit them because the people have a tough time seeing the humanity of the group of people that you're extracting wealth from. Do you get what I'm saying? It's like if I say, hey, I make my money by slaughtering pigs, people say, oh, well, that's fine because nobody cares about a pig. Right? Or I slaughter cattle. Oh, that's fine. Who cares? But if I said I make my money by slaughtering puppies, well, there would be an outrage. Do you follow what I'm saying? Do you get my logic? Let me know you get what I'm saying so I can know that I'm not talking crazy or talking weird or over anybody's head. I'm not trying to do that. I'm not trying to be disrespectful if you disagree. It's your right to have whatever opinion you want. I'm really speaking as a guy who's been a black man my whole life, and I was a college professor for 30 years. I sat there and I watched the athletes. I heard their stories. I saw what they were going through. I had athletes in my class who failed my class because they had to keep going to football practice so much, or they were forced to change their major. They said, "Oh, Dr. Watkins' class is too hard. He's gonna force you to learn too much. So we're gonna put you over in a major that is more consistent with your sports schedule." That's unethical. That's wrong. But at the end of the day, it's not about right and wrong. It's about really understanding what's going on, so you can understand what you should be expecting from this process, from this system. When they talk about systematic racism, People say that term all the time, but they don't even know what it means. Like, what is systematic racism? Well, it's a bunch of systems that are designed to oppress you and to take things from you. Right? The NCAA is a system. The legal system is another system that backs up the NCAA system. When they say, hey, we want to go make $18 billion a year off of the black community, and we want the system to support us. This is why books like Black Labor, White Wealth by Dr. Claude Anderson are so important. We read this book every Wednesday night, and I promise I'm going to get back to stocks in a minute, but I want to kind of make this point since we're fresh off the football game. Books like Black Labor, White Wealth are very important because what Dr. Anderson shows is that for hundreds of years, the reason that white wealth has taken off so much is because they are able to extract wealth off black labor. Do you really think that stopped in 1865? Do you think that stopped in 1865? No. They just created slavery by another name, or they created other subtle forms of what can almost be called a type of slavery, right? The NCAA, that's not chattel slavery, right? Playing for the University of Alabama is an honor. It's a lot of fun. You get to be on TV. It's very cool, right? Nothing wrong with that. But you got to remember, freedom and slavery are not a dichotomy. It's not a binary thing. It's not a red pill, blue pill, on-off switch. Freedom and slavery is a continuum. There's varying degrees of freedom, varying degrees of slavery. So ultimately, in something like college sports, sure, it's not slavery. I mean, you could quit and go do something else. You can go work at Walmart instead of playing for the University of Georgia. But if you want to be a college athlete, you must submit to a certain system. So there's no freedom for you to be a college athlete without you submitting to a system that says that these coaches who are mostly white are going to extract billions of dollars from your family and from your community who's mostly black. And so when you connect that to the fact that black wealth is going down, black wealth has been going down for a very long time. Why is it going down? Well, don't you think an extra $18 billion a year would probably help reverse that trend a little bit, right? This is money being taken out of your community. This is no different from going to an African country. When the Europeans at the turn of the century looked at Africa, they had Africa on a map, and Germany and France and England, all the countries divided Africa up and said, you get to extract wealth out of this part of the continent. You get to extract wealth here, right? Well, the same thing is true with the black community. They just go in and they say, okay, these are the athletes. This is a $1 trillion commodity. We're going to extract wealth. We're going to create training camps all throughout the hood. Every hood in America is going to have basketball camps and football camps so we can identify who the best athletes are and make sure they're all trained. We're going to also market sports so that they want to become athletes. So this becomes the dominant part of their culture. So we're breeding the pigs to get them ready for slaughter. We are training them to believe that going to the slaughterhouse is a good thing, and they're going to go play in the Pop Warner leagues. They're going to go in then they're going to play in the high school system. They're going to get invited to the Adidas camps, and the whole time we're going to be scouting them no differently from the way a pimp is scouting a bunch of beautiful women to decide which one am I going to put on the corner next. And it's easiest if you have a whole culture that promotes the idea that becoming a prostitute is a good thing, right? Like in Japan, they train geisha girls, or I don't know if they still do it, but back in the day, they had geisha girls, and they would take these women, they would train them from the time they were born to serve men. So they were honored to be a part of that geisha system, right? But some would argue that maybe that wasn't necessarily the best way to raise a child. So sometimes you have people that break out of the system, they break out of that matrix, and then people think there's something weird or something's wrong with them, or you're being too radical, or you're crazy, and I get that, right? I get it all the time. I hear it all the time. I started writing articles about the NCAA when I was 25 years old, and I was the most popular writer on the University of Kentucky campus at that time. I don't know why. I didn't even know I could write. I had no idea I had writing ability, but I could logically put my thoughts together, and I would write these articles, and everyone would read the articles. Everyone on the campus knew me. And at the time, it was kind of a big deal because Kentucky was making about $20 million a year off the basketball players who were mostly black. So they would go to these, big games in the Final Four almost every single year. I was there in graduate school. And people started saying, well, maybe the athletes should get some of that money. And here's what happened. This is what's interesting. The coaches, one of the players came to see me in my office. I was teaching mathematics at Kentucky at the time. I was in the math department. So one of the coaches brought a player by the name of Derek Anderson, who eventually played for the San Antonio Spurs. He brought Derek to my office to meet me because he said, this is the black man you need to know. You need to hear from him. And Derek, it was interesting because they had to sneak to come see me. They said, well, don't tell the coaches that we came to see you. I said, but aren't you supposed to be free? Like, why would you have to sneak And why would a grown man have to sneak to go meet another grown man? That's you got to really question any scenario um, in which in which black intelligence is treated almost like a form of criminality. I said, look, it's not like we're meeting to do a drug deal. We're not meeting to trade hookers and to kill people. We're meeting to exchange knowledge. Why would they be so threatened by one black man exchanging knowledge with another? Well, it's because they I believe deep down understood that that system is fundamentally corrupt and unethical. And in fact, one of the other players, a guy named Nazi Muhammad, I'll never forget him. He was a great guy. He actually told me that the players were told not to read my articles. Like, don't read that stuff. They're gonna put stuff in your head, and he's gonna put stuff in that blah blah blah. Well, it reminds me of if you watch this movie about a guy that played for Syracuse named Ernie something, who was a great running back at Syracuse. It's crazy because he came in after Jim Brown. They hardly mentioned Jim Brown because Jim Brown was more like me. He kind of talked the way I talk about Black Power and all this other stuff. Whereas Ernie, I can't remember his name. Somebody, if you know his name, say his name. Because he died of leukemia. It's a sad story. But he won the Heisman Trophy. And when it came time for him to stand up for the rights of Black people, Ernie Davis, thank you. When it came time for him to stand up for the rights of Black people, the coaches were like, "No, son, you don't want to get distracted. You got to do your talking on the field, son." And that's and that's a logical way for them to say, "Look, we got a good thing going. Like this pimping thing, sure the Black community loses, but we're winning. So we have to do everything we can to maintain the system." That's why it's very, very dangerous for Black people to think that you can go and claim the wealth that is rightfully yours, but yet still maintain favor from the people who benefit from a system that is built upon the extraction of wealth from the Black community. Do you understand? You can't achieve gains for your family while simultaneously trying to befriend the people who profit from your demise. Right? So this is not a good and evil kind of conversation. This is about winning. This is about getting what's yours. Right? So when you talk about Black wealth, I encourage you to become a fighter for what is yours. I encourage you to also understand the system so you can know where to position yourself in the system. Capitalism doesn't necessarily care about trying to exploit you just because you're Black. No, capitalism will exploit you because you're Black, because Black people are the easiest ones to exploit because there is a fundamental disdain for Black people. Right? Okay, so let me hop back in and start talking more about the stock market stuff again. I felt the need to kind of drill into that so you can really understand this wealth dynamic and kind of how wealth works and where you want to position yourself in the process. So think of it in terms of translating this to you in your day-to-day life. This is why when you raise your kids, when you talk about wealth, you make sure they understand that being a renter is temporary. An owner, you want to be the landlord. You never want to be the renter for very, very long unless you have to. But really, if you're smart and you prepare your kids now and do the $5 a day investing plan and little things to make sure their wealth is solid by the time they're in their 20s, they never have to be a renter. They get to go right into the game as a landlord, which means they're going right into the game as a leader in the economic system, not as a follower. Also, same thing, consumer versus producer. Producers get the wealth, consumers give the wealth away. The last piece is when you talk about things like what's the last one? Oh, employee versus owner. It's okay to be an employee. There's nothing wrong with that, but you have to own something, right? You have to own something, right? So ultimately, the measuring stick of economic success should not be how much money do you make, right? I have a friend who her daughter went to college, and I asked her, I said, "How's your daughter doing?" And she said, "Oh yeah, my daughter's got a job at Goldman Sachs." And I remember a time when that was a big deal, and it is a big. I mean, it's cool, right? I'm very happy for her. But here's the deal, right? So she went to a really expensive school. So she's probably got a bunch of student loan debt. She's now working at Goldman Sachs. They're probably paying her good, the investment, whatever she's doing, investment bankers, whatever. They're probably making good money. But that Goldman Sachs is a Jewish owned firm, if I'm not mistaken. The Goldman is a Jewish name. And so the bulk of the wealth she's generating is going to go toward another community. It's not going toward her and her family. So at some point, she needs to have a pivot. At some point, she needs to really sort of reassess that and say, okay, I'm on the income train right now, and this is working out for me pretty well. I've got a great job. I'm making good money. I've got a lot of artificial validation and status that comes from being accepted in a white institution that makes me feel like I'm a better person. Once you get that out of your system, you've got to start. She, in my opinion, should start thinking like, okay, how can I get with some other Black women or black people and create an institution that is going to do a few things. One, it's going to create wealth for my community and for my family, where we're the boss. We're deciding what this institution is going to do. And also, we're creating jobs for other Black people. We're not just creating one job for ourselves. The Black community can never be saved, and even your own family will never be saved economically by one person who got one really good job. There will never be one person in your family who got a really good job who's going to be able to save everybody, unless that person gets a job making $20 million a year playing for the Dallas Mavericks or something, right? Maybe that's an exception, but for the most part, the community can't be saved by people that have jobs, because a job is a one-off kind of thing. Job creators are the ones who are going to save the community, right? And so ultimately, that's one thing she has to do. Second thing she has to do is figure out how her net worth is going to become positive. Now, she's starting the game with all these student loans. She's got a high salary, but if she gets to New York and starts living a lifestyle that is consistent with what it means to work for an investment bank, then you can get caught in that debt trap. So you got the student loans, so you defer paying the student loans, or you're only paying the bare minimum because you want to maintain this lifestyle that is an artificial temporary reward for the fact that you worked hard and you graduated from college and now you work for Goldman Sachs. So you're making $180,000 a year, but you're spending $180,000 a year. So you're literally not moving forward at all. That means that if you lose your job, you can't survive very long. You don't have any financial security. So when you go into that job and those people are treating you badly, or you get sick one day and you can't work anymore, or you just get sick of the corporate plantation, well, you got to keep coming back, because you don't have what you need in order to have true financial security. You can't sort of walk away and say, okay, I'm all right. I sacrificed for a few years, put some assets to the side. Now I'm financially safe. You don't have that. You don't have that security. So ultimately, what has to occur, in my view, is one good habit to be into economically is to live below your means. Right? It doesn't mean you can't still enjoy things and live a good life, but really, when she's making this big money at Goldman, I'm hoping that she can find a way to live off, say, 70% of her current income, with the rest of that money going towards some sort of long-term investment vehicle that's going to allow her to build enough wealth and security that she can quit her job eventually. Also, if she's also invested in things like, a couple small businesses, maybe with friends that have a special skill, where that business has a chance to possibly pop out and just take off, or maybe she's invested in some real estate, so she's generating some free cash flow, as well as some value appreciation that comes from ownership of property. Those little things don't just give you the security, but they also give you that chance to have that millionaire breakout scenario, where maybe you invest in something that does extremely well. Next thing you know, your income's going to the moon. But the thing about a job is not only risky, but it is also, because you're talking about one source of income that is highly dependent upon the favor of somebody who doesn't even like you anyway. But also, it's very unimaginative in terms of shutting down all your economic possibilities. There are so many possibilities out here when you are planting seeds in places where the economic grass can grow, right? If you're planting seeds in small businesses that you believe in, or you're planting seeds in little stocks that you want to invest in, or you're planting seeds in real estate holdings that could possibly shoot up in value, that's how you get positioned to possibly grow your wealth. Or you see something about crypto, and you start buying little pieces of crypto. It's 2012 and you say, hey, this new thing called Bitcoin's out here. Let me take a little bit of my extra money and just kind of plop some money in this Bitcoin thing so I can own some of this. Because you don't know where the next big economic revolution is really coming from. You don't know which stock is going to be the next big stock that's going to triple in value, right? But if you're not in the game, then you don't get the benefit from when the game starts to change, right? And so, in fact, actually, if you think about it, when you are not investing at all, or you're just taking your money, you're earning your paycheck, you're spending it, and then you got to go back to work to get another paycheck, what you're kind of doing is you're taking yourself off the ramp, the on ramp of economic success. Like if you think about wealth, it's like being on the freeway, right? People on the freeway can drive 70 miles an hour and they're just zooming down the road. Sometimes there's a traffic jam, but or a car accident. But for the most part, if you're on the freeway, you're going to go faster than somebody who's driving the side streets. So when you are just earning your check and you're getting up, going to work, coming home, going to bed, getting up, going to work, coming home, going to bed, and you're not able to take some percentage of your money and invest that consistently and plant seeds, then you're really driving down the side streets of economic success. You will never be able to go as far as fast on the side streets as somebody who's on the highway. So make sure your kids are on the highway, I would encourage you to go beyond just teaching your kids. I would encourage you to give them assets to work with. It's very frustrating when you have all this economic knowledge but no money. And so what you want to do is, again, you plant those baby seeds, $5 a day program. Anybody can do it. And by the time your child's 20, 25 years old, they've got $100,000, $200,000 in liquid wealth. That's powerful in two ways. One, $100,000, $200,000 is a lot of money. They're no longer poor and black. They're no longer in the struggle. They're no longer like, woe is me. The world is their oyster at this point. Number two is powerful because the wealth is liquid. There's a difference between having $200,000 in wealth versus having $200,000 liquid. Liquid means I can get that money tomorrow. That's beautiful. That means I can make a lot of economic moves. Liquidity is extremely important. Liquidity is an often overlooked but yet incredibly important aspect of economics that people don't talk about. When remember when everybody was talking about how Donald Trump was a terrible businessman because his businesses weren't profitable. I don't know if y'all remember that during with all the chaos when Trump was in office. And now I'm not sitting there trying to say Trump was a great businessman. I'm not here to say that he's a great politician or a great guy. I don't think any of those things are true. But one thing people are missing when people would say like, "Oh, he's a terrible businessman because he wasn't profitable," that told me that most of the people saying those things were not business owners. They've never run a business, in my view, because if you run a business, one thing you understand is that income does matter eventually. Eventually, income does matter. Making a profit does matter. But do you understand how many businesses there are that can literally go years and years, sometimes decades, without making a profit at all? Amazon, Jeff Bezos is the richest man in the world, or was the richest man in the world, one of the richest men on earth. He went years without making a profit. Amazon went years without making a profit. So do you know why they were able to do that? Well, because the banks kept them liquid. The banks just said, here's a few $1 billion. As long as you think you're going to be able to make money soon and you can service the debt and pay the interest, then you just keep going, keep living good. So a lot of times you'll have people that'll be living a really extravagant lifestyle, and they'll go to the IRS, and the IRS will literally claim that person has made no money. In fact, let me give you another example. Warner Brothers. This was brought to my attention when I was talking to Will Smith's brother, Harry. I don't know Will, but I know Harry, and Harry and I talked for hours. He's a very smart man. Harry was talking about how to this day, I couldn't believe it. I got to go look it up to confirm it to be true for sure. But he said that Warner Brothers to this day claims that the entire Harry Potter franchise has never made a profit. Did y'all know that? They literally are saying, well, Harry Potter was a money loser, which is the most ridiculous thing I've ever heard, because Harry Potter was one of the biggest franchises in movie history. But the reason they do it that way is because they're like, look, we don't need to make a profit. We just want to be liquid. We see the money coming in. We see the big revenue streams, and we're taking care of ourselves and taking care of each other and paying dividends to shareholders and all this other stuff, and because we're staying liquid. So basically what I would say to you is, when you're thinking about your financial life, don't just pay attention to how much wealth you have. You always have to pay attention to how liquid you are. So where does that come into play? Well, let's say, for example, I've had a lot of people, when I went to Ghana in 2019, a lot of people were asking me about investments they can make in Africa. And I said, yes, I think we should all invest in Africa. And I'm looking for opportunities to invest in a way that makes sense. Ken Harris, Dr. Ken Harris, who runs the Black Business League out of Detroit, he does delegations to Africa. I'm going to try to join him on one because I really want to find some quality investments that I can actually bring to you guys and mention to you. Well, here's the problem, though. When you invest, let's say you find this great company in Africa you want to invest in. The problem is, so let's say you got, an extra $10,000, and there's like a boating operation, in Africa where they export a product or something, or there's a farm or something, right? Or something you can invest in Africa. And they say, just put your last $10,000 into this investment. It's okay to do that. But the problem is, once you put your money in, you can't get your money out. There's no market you can go to where you can say, hey, I put $10,000 into this investment, into this chicken farm. I'd like to sell you the chicken farm for $10,000, right? Maybe you can find a buyer, but it's a lot of work. You got to go hunt down a buyer, and you got to convince them that it's worth $10,000. And then what if you only get two offers, and both of the offers are, one's for $5,000 and one's for $4,000, and you really need the money? Well, that is what is called a liquidity problem in finance. You need money, you need cash, you have something that has tremendous value, but you can't get your value out. Whereas if you put your money into something that's publicly traded, one benefit of that is that you can still get the upside, but you're liquid, right? So this does not mean you shouldn't invest in Africa. It doesn't mean you shouldn't invest in small businesses at all. I'm not saying that at all. It just means that when you consider what investments to put your money into, take the time to pay attention to liquidity. If you don't pay attention to that, then you're going to end up missing a big chunk of the boat. There are some situations, especially during a financial crisis, where liquidity is far more important than how much money you're going to make. In fact, there have been times where I've taken a far less profitable investment over a more profitable investment because the least profitable investment was more liquid. It gave me access to my money in case I needed it. So keep that in mind as you invest. All right. So let's see here. Next, Terrence is asking, what are your thoughts on Credit Strong for building business credit? Do you suggest other options? Yeah, Terrence, I looked in. You submitted the question about Credit Strong. And by the way, if you want to submit your questions for me in advance, just log in at theblackstockmarketprogram.com. And these are the questions I'll answer first. Basically, I looked up Credit Strong. And what Credit Strong appears to do is they seem to basically allow you to get a loan, an installment loan from a bank in Austin, I think, that where you're repaying the loan and they're reporting it to the credit agencies, and they lock the money up in an account so you can't actually use the money. And I find that kind of interesting, right? So it's like, okay, we're going to loan you money. And this is from what I gathered. We're going to loan you money. We're going to put it in an account that you can't use until you pay the interest, and I guess you pay the interest and the principal. There we go. Yeah. So you can't use the loan until you pay it off, but you got to pay the interest off, which means that you're not going to get to use your money. So it's like we're loaning you money without actually really loaning you money. Like we're loaning you money without letting you use it. And the benefit to you is that by paying this loan off, we're gonna report it to the credit bureaus, which is gonna increase your credit score. I'm not gonna say that that's a bad idea. I'm just gonna say I wouldn't do it. Because if you loan me money, I need you to let me use that money because I might be able to take that money and go make more money, right? Because, here's the deal. A lot of people think credit scores are the most important thing in the world. Credit scores are not the most important thing in the world. What matters more, in fact, credit is a replacement for those who don't have cash. I had years where I didn't have a good credit score, and this was a long time ago. But now my credit score is it's fine. But there was a time where it wasn't very good, and I knew exactly what I needed to do to fix it. I just didn't care. I didn't care because I didn't want to get into a bunch of debt anyway, and I had all the cash I needed to buy whatever I wanted. So what did I care about getting good credit? It didn't matter to me. So I'm not trying to say that credit scores don't matter. I'm not saying that at all. I'm saying that this particular method of letting them give you a fake loan in order to improve your credit score, I don't think it's the most efficient way for you to improve your credit score. There are places where you can get small installment loans where you can actually use the money and you can pay that off, and that can help your score. Paying your bills on time is a big part of getting your credit score up. You can call the creditors that you owe money to and renegotiate a lot of these debts. A lot of these companies will take pennies on the dollar to settle the debt. The last piece is the Fair Credit Reporting Act gives you the right and the ability to challenge anything on your credit report. Anything. So if you see something on your credit report that you aren't sure should be there, if you're not sure, you don't have to know for sure one way or the other. If you're just not sure, like, wait a minute, I don't remember owing this money, then they are legally obligated to validate that debt for you. And if they do not validate that debt within a certain amount of time, I want to say it's 30 days, maybe 90 days, I can't remember, then they must take that off your credit report. So I've seen people go into their credit report and just challenge everything that they're not sure about. And as a result of that, they got some stuff taken off because they legally have to remove it. There's also things like the Fair Debt Collection Practices Act, where you can really kind of deal with these bill collectors in a certain way. I think the law says something like if you just tell them stop calling me, they can't call you anymore. Bill collectors are getting creative though. They're starting to follow people on social media and stuff like that. But I would just say that if you want to deal with something like bad credit, the best way to deal with it, in my view, is to just not be afraid of it. Like, just go dig in and just confront it. Like, get your credit report, go through it, look at it, start challenging things that you don't think should be there. And then after you challenge things, maybe go and deal with the creditors, like send them, letters and, or sorry, or call them, maybe, or get somebody to call on your behalf to negotiate down the debt. But I also find that having a little bit of cash can be helpful, where you're prepared to kind of settle debts for a low amount of money. And also, again, part of the reason that having bad credit didn't bother me that much when I had it was because I figured out a way to make money. If you figure out a way to make money, then credit scores don't matter nearly as much. And also, there's an interesting thing about credit scores and credit that always fascinated me. Do you ever notice how it's much easier to get them to loan you money for something stupid than it is to get them to loan you money for something productive? Like, it's much easier to get a loan. Like an 18-year-old with no credit history can get a student loan for $200,000, but that person can't get a business loan for 25 grand. Or a person can go and get a car loan any day of the week. No matter how bad your credit is, they always ready to loan you money for a car, but they won't loan you money to like buy a house. And even though your rent is more than the mortgage payment on the damn house, that's an interesting kind of thing. And I don't know. I mean, how much of this is by design? I can't say, but there's something interesting about when you talk about debt traps. Debt is not a trap if you're borrowing money for something that's going to benefit you. Debt is not a trap if you're borrowing money to buy a home or to start a business. Debt can be the thing that liberates you. Debt can be your liberator, right? Debt is a trap when you're borrowing money for something stupid. Like if they, when you go to the jewelry store and they say, "Hey, we'll give you financing on this $10,000 necklace," like, yeah, that is a big trap, because now you just got, the De Beers just sold you a diamond necklace that, maybe cost them $3,000. They sold it to you for 10, and now you're paying off like an artificial debt. It's like, so it's almost like if you're hungry and I have a candy bar and you say, how much is your candy bar? And I say it costs $30. And you say, well, that's too much. And I say, well, this is the only place you can eat within a 20-mile radius. So you have to buy the candy bar for me, right? And I say, well, and don't worry, we have, same as cash financing, like no money down. I can loan you $30 to buy this candy bar from me. And you say, oh, thank you so much. And so you borrowed $30. So now you owe me $30 for a candy bar that I paid 50 cents for, right? That's a problem. That's a wealth transfer from the rich to the poor. That's a wealth transfer from those who own capital, to those who own capital from those who don't have capital. So because I have access to a candy bar and you don't, I'm able to extort you in a way by putting you so deep in debt that it's going to be hard for you to get out of it. And that's where, the law comes into play. Usury and things like that come into play, because obviously that's not a fair deal. I shouldn't do that to you. And universities are participating in that extortionary process because they have this thing called a college degree. And you've been raised your whole life. Again, remember, capitalism is designed to teach you to think a certain way, right? So you've been raised from birth to believe that you must have a college degree in order to be successful. That if you don't have a degree, your life is ruined. It's going to be terrible for you, etc. So there's this artificial demand for a college degree. And what happens is there's a limited number of spots. There's a limited supply, right? So I just say, hey, look, if you want to come to our school, you got to pay what we tell you to pay. But don't worry, you can just sign on the dotted line and we'll let you in, but we're going to put you $100,000 in debt. And so that's honestly unethical and illegal, and it does become a debt trap, because a debt trap to me is anytime you borrow more than you can afford to repay, because the asset that you borrowed the money for isn't giving you the revenue to repay it, right? So college loans are only a debt trap when you borrowed a ton of money to get a degree that is giving you a low-paying job where you're going to pretty much become a sharecropper for the rest of your life, working the land, working this little college degree, and never get a chance to repay that debt. Now, if suddenly all college graduates were making $500,000 a year, then it would be perfectly fine to go borrow $150,000 to go to college, because you would then be making a good, what we call in finance, a positive NPV investment, positive net present value. What that means is that the amount you're borrowing is less than the amount you're receiving, right? That's how wealth is built. Wealth, it comes from buy low, sell high. You give up less than what you receive. If you do that, then you win. And what I like about Dr. Claude Anderson in his books, like Powernomics and Black Labor, White Wealth, is he hits that key point very clearly, where he talks about something called the doctrine of unequal exchange. The doctrine of unequal exchange is basically how black wealth got extracted, where we were giving up something that had more value than what we were receiving, right? So they went to Africa and they said, here's some here's some old trinkets, and here's some used weapons, and here's a Bible. And Africans instead, and in return, the Africans gave them gold and copper and all these precious metals, right? And eventually things like oil and all kinds of stuff, that had real value. So to this day, same thing happens now, right? You give the Bernard Arnault, the founder of Louis Vuitton, you give him $10,000 for a belt and some pants, and he gives you, something that costs him $30 to make. All right, so let me keep going. Let's see. Terrence is asking about crypto miners. Have you ever considered setting up a crypto mining station as passive income? I'm not a big fan of that. I kind of feel like that's such a competitive space, and if there's money being made, it's going to be temporary. If you decide to get into it, I would definitely take the time to work with somebody who is making real money doing that. There's a lot of MLMs set up, with crypto mining operations and whatnot that I don't think are particularly beneficial to those who join those operations, right? MLMs are kind of a snaky sort of thing, to be honest with you. I'm not saying that they're all bad. If you're in an MLM, I hope I didn't hurt your feelings. But the thing about MLMs that's a problem is that, from what I've read, 95% of the people in MLMs don't make a profit. So they, when they're recruiting these new members, the new members are giving money to the people who actually are in the center of the pyramid, right? So you got to be real careful about that. So a lot of, the fact that so many MLMs are attached to crypto mining now and stuff like that, it just right there, that kind of gives me a weird feeling. So I think if you were going to do it, I would just do it in a way that works for you, where you're able to learn from people who really know what they're doing and really making real money. And also remember, as the price of Bitcoin drops, the value of Bitcoin mining is going to go down as well. So you got to be real careful about that. There are companies you can invest in, like Marathon Digital. I believe it's Marathon Digital, that literally make all their money from Bitcoin mining, crypto mining. It's a highly volatile stock, very risky, but it's a stock you can look at if you want to invest in crypto mining without actually having to do it. Michael Watkins, what's up, Dot? What do you think about AT&T as a long-term play? I think AT&T could be a good long-term play with some dollar cost averaging, maybe buying a few shares every week, something like that. Right now, AT&T is it's down a little bit, and maybe this 5G thing is going to reap some surprises. I don't think most of the analysts believe AT&T is a great buy. About half of them like it, half of them don't. AT&T's strategic strength is that they own a lot of assets. They have access to over 100 million customers. The downside, though, I think, is with competition and also debt. AT&T has a crap ton of debt, which could cause the company to pay a price at some point. When you have that much debt, typically when a company has that much in assets, they borrow money to get all those assets. And remember, I told you debt can either liberate you or it can incarcerate you. So with AT&T, there are people that are afraid that AT&T's debt levels are going to catch up with it, especially when the Fed starts hiking interest rates and all that. So, I wouldn't bet the farm on AT&T stock, but I wouldn't get mad at you if you had it in your portfolio, especially if it drops a little bit. Maybe you wait for the dip and buy then. Let's see. William Lumpkin, Dr. Boyce, are you familiar with the blockchain ETF BKCH offered by Global X? Any advice on companies in developing blockchain technology? I think BKCH, if I'm not mistaken, is like a fund, right? It's a fund that does blockchain stuff. Yeah, it's very risky, and it's going to move with the price of Bitcoin. I looked up BKCH, and I saw that the price had been dropping, and I believe it's dropping because Bitcoin's dropping. So if you run into another crypto winter, you might have some down years with this stock. But if you believe in the long-term viability of crypto just as an industry, then it could be a good play. Maurice Harrell, are put options important for long-term investors? I like put options a lot. Put options are basically insurance to protect you against the downside, or they could be bought for speculative reasons. I tend to buy puts just to protect my assets. Where if I'm worried about the stock dropping, I'll buy some put options to protect against the downside. And there are some more creative option strategies you can take. I don't see why put options wouldn't be a good thing to add to your portfolio. Like maybe, and you can get them real cheap. Like if you're really worried that the stock could take a massive drop, if you're afraid, like you got to ask yourself when you're buying insurance of anything, or which that's what put options are, they're a type of insurance. Whenever you buy insurance, you got to ask yourself one important question. What am I afraid of? What's the worst that can happen? And when you lay that out there and you figure out what's the worst that can happen and what you're afraid of, that allows you to then say, how do I then mitigate that risk? Right? Some people, they say, I'm not worried about stock dropping. It's going to be okay. I can stomach it. Well, in that case, maybe you don't need anything, right? You don't have to spend any money on insurance or any put options, right? Because you're not worried about it. Then some people may say, I'd be okay with a little bit of a drop, but if it drops more than 30%, that would probably make me a little real nervous. Well, then maybe you go and you go 30% below the current price, and you buy put options, long-term put options, with a strike price that is right at the point of fear, right at the point where you say, I will get out of the stock if it hits this level, right? And that's one thing I don't really do is, when people buy put options because they think the stock price is going to go down and all that speculation is very risky. I think options are better for kind of managing and controlling risk or generating income from a portfolio. Like I sell call options every week I have a risky portfolio. I have different portfolios. I have my long-term retirement money. I have my safe portfolio, and then I have my risky portfolio that I, kind of play with and have fun with, and I sell options on those stocks. Because sometimes I'll buy meme stocks. Like I'll buy GameStop and sell options on GameStop because everybody loves GameStop and everybody's overpaying for the call options. Like the call options on GameStop are severely overpriced, but there are people that just want to gamble. They want to buy call options out of the money calls, and because they're hoping for a big payoff. Fine, I don't care. You can, that's great. Let's trade. You want the big payoff that happens every now and then. I want the consistent payoff. It might be smaller, but it's steady, because I know that if I sell the call option to you, if I sell the upside of my GameStop to you, then I'm going to get my money regardless. I hope you win. I really hope that the stock goes up and you get what you're going to get, right? So if the GameStop stock is selling, I don't know, let's say it's selling at 150, and I sell a call option to somebody at 170 on the market, then here's what's happening. I'm going to get paid regardless because I own the stock. Like you're basically renting from me the rights to the upside of my stock. Anything past 170, you're going to get. So you're buying the right to gamble. I'm the casino. You're the gambler. You're giving me money so you can gamble. Fine, I'll take your money. Thank you so much. And then let's say the stock goes up to 180 or 190. Well, I'm still making money because I'm going to get everything between 150 and 170. That's still mine, right? But then after 170, that's yours. Congratulations. So maybe we both win, right? You win because your stock went up. Your ship came in, right? You put down $1,000. You turned it into 3,000. Hooray for you, right? Well, I won too because I got paid in advance, number one. And then number two, I also got a piece of that upside also, right? But that's not the only way to kind of play that game. I played the game that way because that's what I appreciate. That's what I enjoy. That works for me, right? But if something else works for you, then you may play the game a different way. And the reason that financial literacy, and then I'm going to answer this, then we're going to close down in a few minutes. But the reason financial literacy is so important is because, if you know all the rules and all the different methods and techniques and opportunities and processes that are out there, you know how to sort of engage in financial consciousness, then you can kind of know how to calibrate your portfolio and your investing strategy in a way that fits who you are and what you're trying to accomplish, right? So anyway, by the way, some of you are asking about the stock options investing and stuff. Well, don't forget, this weekend at the Generational Wealth Conference, I'm going to do an introduction to stock options, and there's going to be a bunch of other stuff there, from real estate to insurance, tax, all that stuff. So feel free to go to generationalwealthconference.com. That's generationalwealthconference.com if you'd like to join us. We get started Saturday morning. And then also stockoptionsmasterclass.com. That's where my stock options masterclass is located, if that's of interest to you. Stockoptionsmasterclass.com. Okay. Next, Maurice says, what do you think about MCSI stock? MCSI. I think MCSI, is that emerging markets? I keep wanting to say it's emerging markets. Let me see here. MCSI, what's in that portfolio? It's an American finance company headquartered in New York. It's a global provider of equity, fixed income, real estate indexes, multi-asset portfolio analysis tools, ESG, and climate products. It operates the MSCI World, MSCI All. Yeah, emerging markets. Yeah, now I remember because I remember looking at the data when I was in graduate school. Um, I think that's not a bad move because that's you're getting international exposure. It's not a stock that's necessarily gonna make you rich, but it is something that has done quite well in the last 5 years. It's gone up 500 over 500% in the last 5 years. Again, imagine buying a house for 100,000 and then 5 years later it's worth 500,000. That's what you're talking about. So it's performed quite well, and I think it's good for that global diversification that I think is important for a portfolio. Let's see. Okay. Quick response to your questions that are in the chat. By the way, log in at theblackstockmarketprogram.com if you want to see the recordings of any of these sessions. And also, if you want to leave me a question for next week. And also, if you log in at theblackstockmarketprogram.com, you can get access to what Dr. Boyce is buying, where I show you 6 or 7 stocks every week that I really like. And these are based on my research in terms of what the analysts feel are great long-term plays. So feel free to log in, theblackstockmarketprogram.com. I want to make sure you guys know that. All right. Somebody asks, how's your daughter doing? I'll talk to you guys about that a little bit later. It's really sad. My daughter was hit by a drunk driver on my goddaughter Carmen. She's like my daughter. She was hit by a drunk driver on New Year's Eve, and she's still in the hospital. And so I'll tell her that you asked about her. I can't. I don't want to talk about it because I'm gonna start getting emotional and getting mad. The guy's name was Brandon Becerra. That's the guy who hit her, Brandon Becerra. And I'm very upset. And I really have an issue. I've always had an issue with drunk drivers. Now it's very personal for me. It's very, very sad to deal with that. So I appreciate everything. I see you guys' comments, Robin, and thank you. All right. Okay. So let me get focused here. Okay, so let's see here. Doc, can you speak about why Pelosi's husband has calls on Apple for $100 on June 1st? What's going on in June? Is student loan deferment ending in May? That's driving the mindset. He has call options on Apple. You mean like, well, I know that Pelosi's husband owns a lot of stock. Like Nancy Pelosi is deeply invested in a lot of these companies. And I'm looking at the article in Barron's, and it says Nancy Pelosi's husband bought stock options on Apple, Tesla, and Disney. Yeah, I wouldn't buy too much into it. And I think if they bought call options at 100 on Apple, and Apple's trading at what 185, 184, something like that. Well, that kind of means that what they're doing is what is called a stock replication strategy. Stock replication strategy is where you buy a deep in the money call option, and it gives you the same payoffs as if you actually own the stock, but it costs you less money to do it. I've done that on Disney and stuff like that. So I mean, I don't think there's anything magical about what he's doing. I think hopefully Nancy Pelosi's family is smart enough not to do insider trading. How much money should you have to start trading in options? Well, you got to own 100 shares of a stock in order to sell options. So if you have a $7 stock, that's $700. But to buy call options, you don't need that much. So I don't know. I imagine you could start trading options for as little as $100, $200. But don't get too carried away with it because it's kind of like stock options are like financial crack. You get a real strong high, but the lows are real low. So crack is whack, as Whitney Houston used to say. So I would encourage you to be extremely careful when using options. You can mess around with it or use it for insurance purposes, but I wouldn't necessarily use that as a primary investing strategy. Courtney Cook, what are your stocks on employer discount on their stock and the ability to pay for the stock out of your paycheck? I'd say, Courtney, I would do my research to see if it's a good stock to own. But 15% discount, though, is still pretty good because if you believe that stocks are trading at the value that they should be trading, then a 15% discount is a little bit like free money. I wouldn't put too much faith in that one company stock, though. Remember, Enron had a lot of employees who put all their retirement in Enron stock. That turned out to be a horrible, horrible mistake, right? Never let a company convince you to put all the bulk of your money in their stock. There is no one stock that is invincible. That is a huge mistake in investing. That you're just putting it all on the line when you do that. So maybe you buy some shares, right? Just because it's a discount, so why not? But I wouldn't put all my money in there like that. So be careful with that. Let's see. Tasha says, Dr. Boyce, do you believe cryptocurrency, Bitcoin, could be the new monetary system? No, I don't think that's ever going to be allowed to happen. I think the government's going to come out with digital currency, but I don't think they're going to. They remember they own the guns The people that own the guns are the ones that can always change the rules whenever they want to. Let's see, Doc, what are the benefits for a child to have an investment account versus a Roth IRA account? I'm trying to sort out the pros and cons. The Roth you can withdraw with a small penalty for education. Yeah. So detailed questions and stuff like that. Feel free to put those in there for next week. Log in at theblackstockmarketprogram.com and I'll answer it in more detail. But generally speaking, the Roth offers that tax benefit where you invest with after-tax money and you get tax-free growth, and then you don't pay taxes when you have the withdrawal. I think with kids and kids accounts, I think a Roth can be fine. I would say talk to your tax accountant to find out any tax benefits you can sort of clump into your investing strategy. But also at the very least, you just got to make sure you're doing something for your kids. The number one mistake that a lot of our families make is we don't plant any seeds for the kids, and the kids get out here and you're competing in a racist society with no assets. That's a terrible place to be. So invest consistently for your kids. Maybe just keep it in an account with your name on it. You don't even have to tell them about it. I don't tell my kids about the money I put aside for them because I don't want them to come to me and say, give me my money. No, it's not your money until I give you the money, right? And I think it's okay to say that. And then you surprise them, right? You just say, hey, here's 20 grand, here's 50 grand, here's 100 grand, whatever you invest and save over time. And you're helping them succeed. But also, even then, when you dole out the money, you may want to look into getting a trust set up and making yourself the trustee. A lawyer can do that for you very easily. And what the benefit of that is that you then have the ability to decide how much money is going to go out and when. So you might say, look, my daughter, she overspends. I'm not going to give her $80,000 all at once, but I will have the money put into an investment account where she will get the interest payments on that account every month, or maybe she'll get a payout of $1,000 a month or something like that, and it'll be for the rest of her life, or $1,000 a month growing by 10% a year, or whatever you decide to do. Okay. Let's see here. Jason Brown says, I found out Calvin Klein underwear is made in Kenya. How and where can I find their white paper, last 10 to 5 years of earnings? Well, if you subscribe to things like Fool.com or other platforms, if you just look it up, just Google search it. I would just Google search Calvin Klein's earnings reports. There's somebody out there that has them, or where you can either get them for free or you can order them. But I don't personally know the honest benefit of doing that other than educational purposes. But, maybe something worth looking into for sure. Let's see, Isla Jacobs. How do you set up multiple portfolios? Is it something through multiple platforms or companies? I have accounts on different apps. And when you put accounts on different apps, you can have different portfolios on different apps. That might be one way to approach it. In Black Money 102, you advise against options and suggest long-term stocks. Is that only for beginners? Yeah, in Black Money 102, which you can log in, if you log in at the blackstockmarketprogram.com, that's where that is. The thing is, if you're just starting investing and you don't want to, make it overly complicated or it scares you, I want you to take the simplest approach so that you don't let the complications scare you into making the most tragic mistake, which is doing nothing. If you sit there and do nothing, that's the mistake that you're making. That's a huge mistake. I don't want you to make that mistake. So what I start off with is the basic stuff. I start off with the Burton Malkiel monkey experiment in 1971, where he showed that when he showed monkeys how to throw darts at a wall and randomly pick stocks, the monkeys ended up making more money than a lot of the experts on Wall Street. So to me, if a monkey can do it, then all of us can do it, right? And so a lot of people allow overthinking and fear to cause them to not just miss out on opportunities of a lifetime, but to also, continue ugly generational curses. Remember, financial trauma is very real. It's all in our families. A lot of us grew up poor and struggling and all that. Why would you want that for your kids? So what I would encourage you to do is don't overthink it. Just go get you maybe an S&P 500 mutual fund like SPDR, SPDR, the S&P 500 index fund, or Vanguard mutual fund, and just on autopilot set it to put $100 a week in that fund, or $50 a week, or $200 a week, whatever you can afford. Pick a benchmark like your car note. If your car note is $300 a month, then put $300 a month in your stock portfolio or more if you can afford it, and do it consistently. Do it on autopilot. Don't go checking it every single day, buying and selling and constantly flipping stocks. That's not what that game is. You don't want to keep poking at it. Just let it grow. Let it grow. Like if I plant a flower in my living room, I let it grow. I don't go in there and I poke at it every hour. That doesn't make any sense. You want to just let it grow. You got it? So everybody type the word grow in the chat if you get what I'm saying. All right, so last question. Derek says, Had a friend send me Nash Digicoins saying it's Fed approved. How do you know this is a good investment? Derek, I don't know anything about Nash Digicoins at all. You can feel free to put it, log into the blackstockmarketprogram.com, put the question there. I'll look it up and see what I can find. Um, I'm not a big fan of new cryptos. I think new cryptos most of the time are garbage. And it's not because the founders are crooks or all the time or that it's that they're stupid. It's just because to make a currency grow, you have to have what they call a networking effect. You've got to have a strong network. And sure, I mean maybe they're eventually going to develop a strong network, but if you're fresh to the to the game and you're just throwing out a white paper and trying to get a bunch of people to give you money for nothing, um, I'm not signing up for that. I'm not. I mean, if you're my friend, maybe I'll be like, okay, yeah, I'll buy $100 worth just to be nice. But I'm not gonna go and invest in a new crypto just because it's new. Because all that crap, 80% of that crap, 90% of that crap is gonna be gone. It's gonna disappear. Okay, so do not let yourself get caught up in that crypto craze. Steady, consistent investing. That's the way to go. If you want to do crypto, do the more stable crypto. Start with Bitcoin, Ethereum, work your way down. That's a good way to go. All right, guys. I hope this helps you. Don't forget, this weekend, virtually, we're doing the Generational Wealth Conference. It's really, really good. You can go to generationalwealthconference.com. We are literally going to cover just the whole gamut of wealth. I mean, Julian Gordon is super ambitious, and it's a 2-day event. Generationalwealthconference.com. That's the URL, and you can see the schedule here. The schedule's kind of crazy in terms of all the things that they're going to cover. And there is a fee. It's $179, but you can get 20% off if you use the code word Dr. Boyce. I believe that's still working. Dr. Boyce, all one word. And you can see here on the first day, we're talking about stock options, what's new with crypto with Teddy Ewing, the Black Family Master Plan with my brother Lawrence, an intro to Forex investing by Zia Long, becoming your own bank by Jake Taylor Jacobs. Julian Gordon is also there on day 2. He's doing mortgages and financing, the buyback Baton Rouge fund that they're doing where they're buying back a big chunk of Baton Rouge, wholesaling and off-market deals, entrepreneurship by Markel Russell. Henry Washington and Jessica Myers are doing wholesaling. Karina Simon is doing Simon, I'm sorry, making money through short-term rentals by Carrington Carter. That's also going to happen. So if you want to take a look at the Generational Wealth Conference, just go to generationalwealthconference.com. We get started Saturday morning, and you will learn a lot. I guarantee it. All right, guys. So please have a great day. God bless you, and thank you for hanging out with us in the Black Business School. We are here to serve you and your family's needs, and we love you, and I hope you guys have a great day. I'll see you soon. Take care. Bye-bye.